Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we are going to be looking at the weekly Forex forecast for the coming week. If you're new to the channel and wish to be staying updated with our weekly Forex forecast, you can do well to subscribe to the YouTube channel and also join the free Telegram community where you can have access to chart analysis. So based on our last week Forex forecast, we can see that price delivered in most of the pairs we analyze, except for the USD JPY. So we can see that our EURUSD, the GBPUSD, the gold, and then the USD card delivered neatly as we forecasted. So for this coming week, we are also going to be forecasting for the various pairs that we normally forecast and make available in the YouTube channel. So we are starting off from the dollar index. This is actually the weekly time frame. So you can see we actually identify this breakout zone using the volume of the candle, which we are anticipating to see price return to. And then you can see that we have this fair value gap here in the weekly time frame, and we can see the push of price to the upside. Price reacted at the fair value gap, but we still have the main threshold of that fair value gap unmitigated. So we are still expecting for the push of price into this particular fair value gap, which in confidence we have this volume weekly breakout block within the fair value gap. So last week we actually anticipated that to see that price push into the weekly fair value gap, and then we're going to have rejection of price to the downside, because you can see we have the rate of the sell side liquidity. So we're expecting bullish move to the upside since price closed above this low after price swept the sell side liquidity. So for the coming week, we're still expecting further push of price into this fair value gap in confidence to this weekly breaker. So, but before that happens, we are going to be expecting to see that price trade to the downside, and then we see price push into this fair value gap in confidence to the weekly breaker. So this is actually the zone we'll be looking out for. When we drop the lower time frame, we're going to be analyzing and be seeing the probable zones where we should anticipate our entry. So this is actually the 50% of this particular week, this candle week, the low to this particular high here. From the opening to the low, the 50% is this particular price level we're seeing here. So we're anticipating a pullback to possibly this price level or the 25%. And then we see the rejection to the upside into this fair value gap. For price to take the weekly high that was created last week, we want to see the rate of this high point, mitigation of this weekly breaker and the fair value gap. Then we can now anticipate the bearish move to the downside. So let's go to the daily time frame. So here we are in the daily time frame. If you can remember, we anticipated the rate of this buy side liquidity, which is also inducements, because you can see we have the fall of price. This was the pullback created before the break of this low points. So we have this buy side liquidity, and you can see price raided the buy side liquidity. The price movement last week was just choppy. We can see how price was just moving within this range. You can see this was Monday's candle, Tuesday, and price dropped on Wednesday to take out Tuesday and Monday low points. Price further dropped to take out Wednesday low, and then we can see the market was just choppy within this range here, but price took out this buy side liquidity. So we're still anticipating the return of price into this weekly breakout zone, and then we could further see price may mitigate this unmitigated institutional order flow. So this is actually our anticipation to further see the push of price to the upside. So price may come sweep Friday's low point, and then we see the rise of price to the upside. This is what we have to see in the dollar index based on the daily time frame. So let's check out the 4-hour time frame. We can neatly see in the 4-hour time frame we have this unmitigated institutional order flow resting here. Now this is the zone where we have our weekly breakout, and you can remember also based on the weekly time frame we have a fair value gap. And also here in the 4-hour time frame, you can see we have in the fair value gap. So this is a very strong zone where we're anticipating to see it reclaim price before we are going to frame our sell move from this particular zones above here to the downside. So you can see this is the 50% level of the weekly candle, and then we're anticipating to see price possibly push to the downside to rate this before pushing to the upside. But based on what we are seeing here, we have the push of price return to this high point, and then we can see a body candle close above. So we have a break of this high points, price to cut this liquidity. So we are expecting the push of price to the upside. So it is either we see price return to this price level here and then push to the upside, or price may take out this swing low points here. Price will come, grab the liquidity resting here to fill up this fair value gap, and then we have the push of price to the upside. You can see that we are having already price giving us a push to the upside. We can see we are having that bullish market condition to the upside. So it is either price return to retest this level, sweeps Friday low points, and then push to the upside, or price may take out this swing low, this sell side liquidity, and then we have the push of price to the upside. Let's check out the 1 hour time frame. Here we can see any structure there. So this is the 1 hour time frame. What we can see in the 1 hour time frame is also we can see that trending to the upside. Price took out this relatively equal lows to cut this liquidity. So price may just react at this price level, take out Friday low points, and then we have the push to the upside. So for the dollar index, we are still expecting the push of price to the upside into the weekly fair value gap for price to mitigate the unmitigated IOF, and then we begin to frame our sell movement to the downside. So let's check out the other currency pairs that we do mainly make focus on and make available in the YouTube channel. So guys, this is the GBPUSD pair. So before we actually continue with this analysis, if you're new to this YouTube community and you really want to be staying updated with our content, then you can do well to subscribe to our channel. And guys, please like, share, and comment on our video so that we would know what are your challenges as it regards to trading. And then we'll come with content to address those challenges. So guys, let's head back to the chart. So here we are in the weekly time frame for the GBPUSD pair. So you can remember we saw the rate of this buy side liquidity. We anticipated to see the return of price. Now what you're going to see here, we have this kind of a sponsorship candle, which Mercedes Sapari will call the double Marabuza candlestick. But when we drop to the lower time frame, we're going to find an order block actually in that particular zone. So we anticipated to see price fall to the downside for price to mitigate the daily unmitigated institutional order flow. Don't forget, our anticipation is to see the rate of this buy side liquidity and for price to mitigate this monthly fair value gap. So now what we are going to see is that price have not yet really mitigated the daily unmitigated IOF. So we are still anticipating for the push of price into the zone before we can frame our bullish ride to the upside. So let's check out the daily time frame. So you can see here we are in the daily time frame. So you can see we have the rate of this buy side liquidity price return to the downside. So now you can see we have the sell move before the buy move to the upside. So we are anticipating to see price mitigate this level. So we want to see further push of price to probably mitigate this daily institutional order flow before we are going to see price push to the upside. And then we want to see first price takes out this buy side liquidity. So this is what we are framing from the GBPUSD pair. So first, for the coming week, we should anticipate price to push downwards, mitigate the unmitigated institutional order flow, and then we find structure within lower time frame. So actually frame the bullish move to the upside. So let's check out the 4-hour time frame. So here we are in the 4-hour time frame. Don't forget, last week we actually saw price broke this channel, and then we anticipated that bearish move. We anticipated to see price pull back to mitigate this zone, but price didn't really mitigate our zone, and then price fell. But based on the lower time frame, we actually frame our entry levels to trade price to the downside. So we're having price imbalance here. We have this fair value gap here, and then we have price did not mitigate this order block resting here. So we're anticipating to see more further push of price to the downside. And you can see this is the daily unmitigated institutional order flow, and you can see within the 4-hour time frame we also have this order flow unmitigated. So we're anticipating to see further bearish move to the downside, and then we frame the bullish move to the upside. Want to see price take out this high point, take out this buy side liquidity. So this is what we are anticipating to see in the GBPUSD. Price should return, mitigate properly our institutional order flow zone, and then we frame our bullish move to the upside. So guys, this is actually our EURUSD, and this is the weekly time frame. So what we are going to see is we have the buy side liquidity we've marked out throughout our analysis that we've been doing for the previous week, and then this weekly fair value gap. Now we saw the rate of this buy side liquidity just where we called out last week to anticipate the fall of price to the downside. So we have this unmitigated weekly inversion fair value gap here. So we could see price return to this price level, or we could see further push of price into the weekly inversion fair value gap before we frame a bullish right to the upside. So we are still going to be anticipating to see further fall of price to the downside in the euro dollar. We still want to see further push of price to the downside. We should look out for this price level, or price may further push to the weekly inversion fair value gap. So let's check out the daily time frame. So here in the daily time frame, we can actually see that weekly level we marked out is in confluence to this other block we are actually seeing here. So we are going to anticipate for the bearish move of price to the downside. So price may just sweep this low point, and then we see price gives the bullish move to the upside, or price may react at this price level, and then we are going to frame a bullish ride of price to the upside. So we are going to be targeting to see price sweeps this high points, or we would further see price push to the upside to sweep this buy side liquidity. But for the EURUSD, we're still expecting to see further push of price to the downside. Let's check out the 4-hour time frame. So here we are in the 4-hour time frame. If you can remember last week, we actually saw price broke through this channel, and then we anticipated to see the return of price, and then price should fall off to the downside. Now what you're going to see here, we have price fell off to the downside. This is the unmitigated order flow here, and then price return mitigated the order flow. We're seeing price reaction to the upside. What we can see now is price filled up this fair value gap resting here. So we could see price fall to the downside before we have the push of price to the upside to possibly rate this buy side liquidity, and then we can now consider what we are to expect in the further coming weeks. So this is what I'm actually anticipating to see in the EURUSD. The possibility of price further falling back to the downside before we frame likely bullish move to the upside. So this is all about the EURUSD. This is actually just me giving us a quick forecast for our various pairs. So guys, let's check out the gold pair. So guys, this is a weekly time frame, and this is the gold pair. If you can remember last week, I told us we should anticipate price to push to the upside, and then we see price drop, and then we targeted this level for our take profits, in which we would likely see price rejection. And now we can see price even closed above that price level. So guys, we are going to actually anticipate to see that price would give us more bearish move to the downside. If you can remember, actually I've been stressing that gold is actually in a bullish market condition, but then we have the sell side liquidity resting here. We have this fair value gap, which we are anticipating to see price return to the downside to come mitigate. And now what you can see, we have this fair value gap resting here that price have not mitigated. So we could see price return to the downside in the gold pair based on the weekly time frame. So let's check out the daily time frame. So here we are in the daily time frame. What we can see is that, if you can remember last week, I told us we want to see price face rejection at this fair value gap, and then we see the push of price to the upside, and then we anticipate our bearish movement of price to the downside. And then you can see price give us that neat push to the upside, and then we had the rejection to the downside. Now price closed below this daily fair value gap, rendering this daily fair value gap to become an inversion fair value gap. Now we are seeing price reacting at this zone, and then we are seeing price pushing to the upside. But slightly below, you can see we have this fair value gap. So now price is retesting this fair value gap as an inversion fair value gap. So we could see the possibility of price further pushing to the downside, or we could see price actually push to the upside and then react at this rejection block before we could see the return of price to the downside to fill up this fair value gap based on the daily time frame. Because now we can also see we are having a bullish momentum here. We are having a bullish structure to the upside based on this particular trend line. And then we can see that price is really retesting this trend line with volume. We can see body candles here. So we could see price just fall to the downside, breaks through this trend line into this fair value gap resting below here. So price is reacting at this fair value gap as an inversion fair value gap. So we could see price fall further to the downside. So let's check out the 4-hour time frame. So here we are in the 4-hour time frame. Let's pull out this trend line. What we can see in the 4-hour time frame, if you can remember last week, we saw this unmitigated order flow. But basically, I told us that we shouldn't really expect to see price return to this unmitigated order flow. We want to see price return to this level, retest this trend line, and then we see price fall to the downside. Now, what we are going to see is that price is reacting at this fair value gap, which is now an inversion fair value gap because price broke through it. Now we can see price retesting it. So we could see the rejection of price to the downside from this zone when the market opened for the coming week. And then we can also see we are having a trend line here. We're having a trend line. So we could see price just push to the upside, retest this, and then we see price further fall to the downside into the fair value gap we identify in the daily time frame before we can determine to frame any form of a bullish structure. So this is all I have to show us, guys.